Is the environment going to be much better once interest rates start normalizing because it brings back volatility in the market?
Well, volatility helps certainly on an investment bank's trading desk to a certain extent, but the old-fashioned, banking business of borrowing short and lending long is assisted not just by higher interest rates across the board, but by steeper yield curves, right? And I think that's what is certainly the potential in the next few years. I do think it's probably a year or more away when we start to get more robust domestic inflation around the world, potentially some more inflation surprises, and that injects a little bit more of the inflation uncertainty premium to the long end of the bond curve. You had a chart earlier about the 2s-10s spread in the US, and that gradually tightening. And I think a very interesting issue here is, will policymakers look at the yield curve not just as an indicator of where they are in the cycle, but actually a driver of it, right? I would like them to keep a decent spread between the short and the long end to allow the banks to maintain their profitability and fund an increased expansion. That's the case not just in America, but also in Europe.
David, it's unfair of me to ask you about other banks. I'm not going to put you in that position with your general counsel, but I am going to ask you about the dampened volatility and the ability to get FIC desks going worldwide, including JPMorgan's FIC desk. Do you just presume continued low volatility across all assets, or can we actually get some spark in the market to create alpha for everybody, including banks?
I think we assume that volatility is going to remain reasonably low in coming quarters, because that low volatility is itself a sign of the breadth of the expansion, the lack of immediate macro risk to the cycle. Obviously, at some point, Tom, almost every conversation I get to with clients is about when this cycle ends, when we get a bear market, and I think that that at least starts, that process begins when we have some kind of regime change in inflation. I don't know when it's going to come. No one does. I suspect it's probably a year or so away, but then that triggers a set of things, probably a faster exit by some of the central banks, and then puts companies in a quandary.